Hi everyone, welcome to the channel. Today we're going to be looking at the company Tyson Foods, ticker TSN. I'm sure everybody's heard of them as they are a leading multinational food company specializing in production of chicken, beef, and pork products, with well-known brands such as Hillshire Farms, Jimmy Dean, and Ballpark. While struggling through the current fiscal year, the stock has dropped more than 30% in value due to declines in net income, earnings per share, free cash flow, all being down over the trailing 12 months. Now, could this be a buying opportunity as their fourth quarter earnings are going to be released on November 13th? And the company sets eyes on improving their results for 2024 by closing 6 plants and increasing production at other plants. So in this video, we'll look at Tyson's financials, perform a stock valuation, and at the end of the video, we'll go into computer modeling to forecast a 52-week stock movement. But first, since this is a stock I own, we'll look at my previous purchases in this company. So let's jump into it. Here are my investments into Tyson Foods. I first purchased into the company in December of 2022, and then a few more times earlier this year. Now, each one of these investments are down, and we can see here anywhere from 10 to 26%. And that's because, as I mentioned, these past 3 quarters have been pretty disappointing for the company, and they're looking at trying to turn this around as they wrap up Q4 and start going into 2024. And with taking into account dividends, we can see I'm actually down about 20% in the stock. Now, in terms of the S&P, if I would have purchased into that during the same time periods, I'd be up anywhere from 5 to about 13.5%, which would give me an overall return with dividends just over 12%. So compared to the S&P 500, I'm actually down about 32% in this investment. Now, down below, you can actually see my investment amount. So I put in about $10,000, and currently it's valued about 7,900. So it's down in that 20% range, as I mentioned a few moments ago. All right, with that now, let's jump over and look at their financials and then perform a stock valuation. Here we have Tyson's financials. And a few things I want to point out first. So we can see here that their financial year is actually from September to September. And also this far right-hand column is the trailing 12 months. So taking into account Q1, Q2, and Q3 of 2023 and Q4 of 2022. So next week, they're going to be reporting their Q4 results for 2024. All right, and we can see here now with these trailing 12 months all being red for many of these data points showing a decline. First one, revenue. Revenue, though it's down, it's only slightly down, maybe in about the $12 million range. So not significant, but still it is down. But right here, net income, we can see back in 2022, 3,238,000,000, and this past year or trailing 12 months, 340 million. So pretty significant drop there. And same thing, earnings per share. Back in 2022, $8.92. And right now for the trailing 12 months, 92 cents. So some pretty disappointing results there. Book value, it is down. Again, it's slightly down from $54 and about 58 cents and down to $52.22. And the other big data point that's down is this free cash flow. It's actually on a decline for the past couple of years. We could see back in 2020, it was almost at 2.7 billion, dropping down to 2.6. Then in 2022, 800 million, and trailing 12 months, 98 million. So the stock has really taken a hit on these data points, just like this free cash flow. Now, it isn't all negative, I have to say. We did mention revenue, but overall revenue has been doing pretty well for the past 10 years. It was generally on the incline, except in 2016. And then, as I mentioned, the trailing 12 months, which is always slightly down. But we can look at dividends. Over the past 10 years, they've been significantly increasing dividends from 30 cents now up to $1.90. So that's a nice sign. Something I really like to see in the company is those that are paying dividends, that they're increasing over time. Now shares, we can see back in 2014, 364 million, and currently trailing 12 months, 361. So not a significant decline. However, we can see in 2015, it did jump up to 413 million. So if we take the decline from 413 down to 361, it's a little better results with that stock going down or outstanding shares going down about 10%. Another data point I like to look at, though, is this net profit margin here. So typically, I like investing in companies that are over 10%. And we can see here Tyson Food is generally underneath 10%. Actually, they never cracked the 10% mark over the past 10 years. But when I did invest in them last year and earlier this year, I felt their stock was undervalued. This is before all the negative or poor results for the past 3 quarters. So I did take a chance on this. Not something I normally do because, as I mentioned, I like to see more at or around that 10% or higher. And the other one here, the return on equity. So Tyson is obviously in the food production industry, which is typically around 11% for return on equity. And we can see here, they're generally well over 11%. We can see even getting up into that high teens, 17, 18% range. Though the past trailing 12 months is slightly below 2%. So again, another one of those disappointing data points. But let's scroll down a little bit, look at a few more data points on a chart as it's a little easier to see. On the chart, the first line I want to look at is the white one, that's revenue per share. And we can see over the past 10 years, it has grown from around $102 now approaching $150 per share for revenue. Now, they did have a slight decline back in 2016 time period, but still overall, it's been up and to the right, and that's what I want to see for these. Next one, we'll get the red one. That's book value per share. So again, same thing. It has moved up and to the right, and that's what we want to see. So back in 2014, looks like it was around $25, and now currently approaching $60 book value per share. So again, up and to the right. I know some of these have had a decline year, but again, it has moved in the right direction overall. So let me just change this graph a little bit just so we can see some of the other data points a little easier. Okay, so let's look at the yellow one. That's free cash flow per share. Now, I did mention over the past couple of years, free cash flow has been on the decline. But before then, we can see it has moved up and to the right. Yeah, pretty choppy, but it was moving in the right direction. It used to be about $1.50 free cash flow per share. And up until 2021, where it was above $7, it did move in that right direction. But over the past 3 years, we could see that big decline. So I'm hoping management can make the changes that they need. I know they're looking at cutting costs, as I mentioned, closing those 6 plants and trying to increase production at other plants to help reduce costs and get these data points in the right direction. And same thing now with the green line, earnings per share. It was choppy, but it was moving up in the right direction from about $2.50 and almost hitting $9. And again, over the past trailing 12 months, it has taken a significant hit down to just under $1. The one positive sign here is these dividends, which have been growing over the past 10 years. So that's a very good positive sign, at least from that aspect. The other 2 data points, it's on the right-hand column for percentages, so return on equity. As we mentioned, they have a pretty good return on equity for the industry, typically in that 17, 18% range, or at least above 15. Back earlier in 2014, we can see it was slightly lower, but still, it was above that 11% for the industry average. And then in purple, net profit margin. As I said, I typically like seeing companies at or above 10%, but I did take a chance on Tyson, which is typically in that 4 to 6% range, which they have been pretty much for the past 10 years. So not much of a change there. But yeah, those other data points that we looked at for the past trailing 12 months that are on that decline, management needs to look at getting those improved, as I mentioned. Let's scroll down now and then look at their stock valuation. Okay, so we can see here on row 75, I previously performed stock valuation back in February of this year. And at that time, I had an intrinsic value at $89, and using an 80% margin of safety came out to $71.50. And that was with a short-term growth rate of 5.5% over 10 years with a 10% discount. Now, based on the trailing 12 months and more specifically the last three quarters, which have been disappointing, my intrinsic value has dropped to $61.56. And taking into account a 75% margin of safety, that comes out to about $46, which is about where the stock is currently trading. And I'm using a 3.5% growth rate now for the next 10 years. And then it would be 3% after that with a 10% discount rate. So if I were just looking at this company now, I probably would not invest in it. But since I'm already in it, I am trying to take a more optimistic approach and trying to believe in management that they are going to be able to turn things around. Now let's look at some other data points here. And the first is return on equity. And we can see it's pretty much been over 10%, 9.6 from 10 years ago. So round that up to 10%, which is one of the good signs I like to see in a company, a return on invested capital being over or at 10%. And we can see during these time periods, they have achieved that. Book value. So we have looked at book value a few moments ago, and it has been on the decline except for the past trailing 12 months, and we can see it's down about 4%. And same thing with earnings per share. It's generally been on the incline, at least during these time periods, but taking a big drop over the past trailing 12 months. We can see down almost 90%. And then sales, we saw earlier that it has generally been inclining except for the past trailing 12 months, which is down only about $12 million, which is really negligible as we can see here. And then the big one that's taken a toll on them is this free cash flow. And we know over the past 3 years, taking into account the trailing 12 months, it has been on a decline. And I think trailing 12 months is only like 90 million. So we can see all of these are negative here due to that. Let's scroll down a little further, look at some other data points. PE. So we can see here the PE at 50. That's because the earnings per share over the past trailing 12 months is under $1. Before that, it was approaching $9. So really taking an impact here. And then long-term debt to free cash flow. Again, free cash flow significantly lower than what it has been in the past. So we can see very high 80. Typically, I wouldn't invest in a company that is over 3, but just due to their disappointing results this year, it has this anomaly. But dividends, as I mentioned, the one positive sign. So right now, dividends over the past 10 years has grown well over 500%. And then shares. So this is taking into account the shares back from 2014, which is in that 360 million outstanding share range, but then it jumped up the following year to like 415 million or so. So from that 415 million to where they are today, if I recall correctly, it's in that $350 million range. It's actually a drop of about 10%. And then net profit margin, as we looked at earlier, it's typically in that 4 to 6% range, which it's coming out here over the past 10 years, 4.6, and past 3 years, 6%. So as I mentioned, if I was just looking at this company now, I probably would not invest in it. But since I'm already in it, I'm taking a closer look at it, listening to management a little bit closer, trying to figure out what they're going to do to change things around. And now trying to stay optimistic and waiting for their Q4 results next week. And next week's results will help me determine what I plan to do with the stock, whether I hold on to it for a little longer or cut my losses and sell out of it. But with that, we'll move on to the computer modeling to forecast a 52-week stock movement, which will also help me guide in my decision for next week. Here in the computer modeling software, I already ran the analysis using the two methods. The first one is the M5 rule method. And as of this past Monday, November 7th, we can see the stock closed at $46.72. That's in the far right-hand column. Column right next to it is just the S&P 500 ETF, which closed at 436 and 93 cents. Other columns is other various data points being used in this analysis. So I did copy all the results and paste it in Excel, which is a little easier to see, but we're just going to scroll through this real quick just to take a quick look at what the stock movement is for the next 52 weeks. And we can see here, it's generally showing a decline, dropping down into $44, hovering in that $44 to $46 range for several weeks, but then declining out in July of next year, getting down into that low $40 range. So Right now, M5 rule is showing about a 10% drop in the stock price. But let's move on to the other method, random forest, as one method is usually a little more bullish while the other is bearish. And same thing here for this previous Monday, November 7th, stock closing at $46.72. And we can see over the coming weeks, it's showing a slight uptick, but then declining, getting down into that $40 range or low $40 range, but then recovering out in April of next year, and then seeing an increase, getting back up into high 40s, into the $50 range, and continuing to go up and closing out the 52 weeks at about $65.50 out in November of next year. So let's move on. We'll go look at all this in the graph in Excel. As I mentioned, a little easier to see. Here we are with the results in Excel. And first thing I'll point out is this vertical red line that represents this previous Monday, November 7th. The blue line is the stock movement. So everything to the left of that vertical red line is historical stock price. Everything to the right will be the forecasted. Looking at some historical movement in the stock, we can see back in 2009, it was trading around $10 a share. And then over the following 12 years, had this nice run up going right before COVID, probably around $90 or so. And then just like every stock in the beginning of COVID, it dropped, going below 60, maybe hitting $50. But then recovered nicely over the following probably 18 months or so, getting close to $100 a share. But then we can see this big drop off and leading to where we are today at around $46 in early November. Now, I did buy in back in December of 2022, and we can see here the stock was probably trading in the low to mid 60s. And at that time, I was probably evaluating it in the mid to high 70s. So I thought there was a good opportunity there. But as we've been discussing, trailing 12 months or the previous 3 quarters at least, pretty disappointing for the stock. And we can see that drop in this chart here. I'm going to move on to another tab, which shows the predictions that we have for M5 rule, random forest, and then taking into the average of both. Looking at the M5 rule, same thing, everything to the right of the vertical red line. That's going to be the forecast that we're looking at. And we can see here, next couple of months going into 2024, slightly negative, possibly a slight uptick early part of next year, or at least maybe in the April-May time period. But then we can see a drop off going out into November of 2024, which would be closing in the low $40 range, which would be about a minus 10 to 11% loss from where we are today in that $46 range. So a lot of this, I think, is going to be based on if Tyson can improve some of these metrics that we looked at. But now let's move over to random forest, as we know that's a little more optimistic or a little more bullish for the outlook. Looking at random forest, we can see initial outlook is a slight uptick going into early part of next year, but then a decline in the stock getting into that low $40 range, but then recovering for the remaining of the year and actually closing out in November of next year in the mid $60 range, which would be about a 40% gain. So if that does pan out, they can start recovering a lot of these losses they've seen over the past trailing 12 months. But a lot of this is going to be based on if management can turn the company around. Now, moving on to the average, we can see it's showing relatively flat going into 2024. Then the same thing, a slight decline that we've seen in both M5 and random forest, but then that same uptick that we had in random forest closing out November of next year on a higher outlook in that low $50 range, which would be almost a 15% gain if this does pan out. Again, this is the average taking into account both the M5 rule and random forest. But whether if you're optimistic or a little more bearish, I think a lot's going to be based on if management can turn their financials around and those data points that we were looking at earlier. To recap, first 3 quarters of 2023 for Tyson have been pretty disappointing, with declines in net income, earnings per share, and free cash flow, each of which having significant drop-offs compared to prior years. Now, management has taken some cost-cutting measures to include closing 6 plants to try to turn things around, but next week they're going to be reporting their Q4 results. And based on their changes that they're trying to implement, we'll see if the stock outlook is going to continue to decline like the M5 rule is predicting, which would be about at least another 10% decline by November of next year? Or is it going to be more positive like Random Forest and regaining some of the losses that the stock has seen over the past trailing 12 months and possibly being up as much as 40% by November of next year? So I hope you enjoyed this video and gained some information. If so, consider subscribing, and I'll see you next time.